Hello, everybody, and welcome to another iGaming Next weekly news live. It feels good to be back, I must say. I've been off for the last 2 weeks, and Nico, you seem to have basically reinvented the genre while I was away with two really special episodes.
Yeah, indeed we did. So 2 weeks ago, we had the Samba do Brasil, and everyone was like, "Yeah, Brazil is finally happening." And once again, shout out to the three gentlemen who enlightened us. So if you want to get your head around Brazil, just restream the version of 2 weeks ago. Last week, we had the dirty dancing of Clarion facing SBC. Hopefully, it will turn out to be a Michael Jackson's Beat It, when in the end, the two groups just align and start a great dance. And today, once again, as it's crazy. Every week we come up with like, okay, yeah, it's a great week, and this week has once again just been awesome. But as already pointed out by Elizabeth, everybody loves a comeback, and now as Britney fucked hers up, it's all about you, Jake. How are you today?
I'm good, thank you very much. It's good to be on with you as well, Nico. And like you say, I'm confident we can come back with a bang this week because we always say what a crazy week it's been and that there's so much news. But this week, I mean, it's been crazy. Every day there's been like story of the year coming out almost. And Connor, who often joins us on this stream, has been off. He's off today and he was off yesterday. He's going to come back and he's not going to have a clue what's been going on because there's just been so much news.
Indeed, there's a rumors going around that he's an embedded correspondent at one of these topics, crawling his way through, the testicles and the overall story. And I'm pretty sure as soon as he comes back, he will come up with a great story as well. We never know, but in 1 week's of time, we will know, and then probably we will say like, okay, last week we thought we already climbed Mount Everest, and now it turns out there's another and even bigger mountain to climb, and Connor just found it.
That's right. Yeah, he's got to come back with something up his sleeve, hasn't he? But what I will say is, before we go any further into those news headlines, Nico, let's say thanks to our sponsors this week, to Playson and to YOLO Group, of course. As you can see, there's a comment section on the right-hand side. Thanks to everybody joining us today, in Bogdan and our producer, Elizabeth, who also says hello. And Nico, who wishes me congratulations, because one of the reasons I was off last week was because I was getting married a couple of Saturdays ago. So appreciate that, Nico. Thank you very much indeed. Nico Janssen, let's get on to 10 in 5 before we delve into the biggest headlines of the week.
Yeah, and once again, so the iGaming Next, Nico, thanks for the divorce. Yeah, indeed it is, right? So getting married. It's so within your 30s. As soon as you hit the 40s, it's all about getting divorced. But fingers crossed, Jake, it will last forever. It will last forever. Sure, you're one of the only ones that will last forever. But coming back to touching down on a 10 and 5, as we all know, it's reporting season with Q2 of 2023 and Penn. We will get into detail of Penn and what has happened with Penn. They post a revenue of 1.7 billion. So Penn Entertainment has reported a revenue of 1.67 billion US, indicating a marginal raise of 3% year on year. The net income for the same period stood at roughly 78.1 million, and the accompanied net income margin of 4.7. So decent numbers, but as said, we will zoom in into Penn and what has happened with Penn, and great anticipated news during this live stream. Light and Wonder rocks with a Q2 with a 20% revenue growth. So the casino gaming technology provider Light and Wonder achieved, and be aware, a 9th consecutive quarter of consolidated revenue growth with a 20% increase in the second quarter of this year. The gaming revenue increased over a year on year by 21% to 471 million, and which is driven by 41% sales increase in North America and Australia. Heading over to Win as they talk a substantial UAE growth potential and a Q2 revenue rise. So as we all know, Win finally will be able to open the first casino at El Marjan Island. And so they announced it in early 2022. And the Wynn Resorts facility will be located on the man-made El Marjan Island in the Emirates of Ras Al Khaimah and will cost approximately $4 billion. So based on this one, we see a bright future, or Wynn sees a bright future, and they have a business Q1 revenue of 1.6 billion US dollar, which is a 75.8% rise. Crazy, as said, crazy number. Sport Radar revenue is also up by 22%. They reported their second quarter sales were up 22% globally, and they reached 237.7 million US. As bettors worldwide generated more activity and higher priced offerings, such as managed betting services, according to the company. Or to quote CEO Carsten Curl, optimizing our portfolio with a focus on products that will give us higher margins. So this is what he stated during a analyst's call Wednesday morning, so yesterday morning. Entain hails record online players after revenue hits 2.4 billion in H1. So shout out to Entain as they reported a 14% year-on-year increase in net gaming revenue, NGR, to 2.4 billion pounds, which is roughly 2.78 billion euros during the first half. And this was held by a number of active online players. We will zoom into further news of Entain later on the live stream as well. Heading over to Catena, as Catena seeks a 3 million plus savings from a new cost reduction program. So also Catena Media has informed investors that it expects to secure group cost savings of between 3.8 and to 4.2 million euros. And most of this, roughly 2.8 million, will originate from their sale of sportsbooks assets to Moneta Communications Limited for 6 million, and they see a decrease of annual costs of 2.8 million. Then heading over to regulation, as MJ suspends 2 companies' gaming licenses, and the unlucky companies being affected are SFJL Holdings Limited and Green Feather Online as well. 2 more to go as operators fail in legal challenge to the Baden-Württemberg gambling law in Germany. As of now, sportsbook and slots, retail slots, need to be separated. And of course, this has now been decided by a court ruling in Germany, as the plaintiffs had argued the ban on betting venues and gaming halls being in the same building violated the constitution. As said, now we have an official ruling. And last but not least, Play and Go celebrates the Hugo legacy for his 30th anniversary, and they come up with a couple of games, so it's worth having a look at this one as well. And shout out to Play and Go for coming up with the 30-year anniversary of Hugo.
Brilliant stuff. Thank you very much, Nico. You did an awesome job, as always, there. But after 10 and 5, there's only one place to start this week, and that's with the massive news that Penn Entertainment has signed a mega $2 billion deal with ESPN to launch an ESPN Bet Sportsbook in the US. If you've been following this news, you'll know that Penn is now cut ties with its previous sportsbook partner, Barstool. with the controversial content and media business that was basically handed back to its founder, Dave Portnoy. And yeah, the Barstool Sportsbook will now become ESPN Bet in 16 states where Penn holds a license. And those relaunches on that brand are likely to start from about November 2023. Other details, Penn has signed a 10-year partnership with ESPN, with the prospects for a further 10 years on top of that. But it could be called off after just 3 years if the ESPN Bet brand does not carve out a meaningful market share in that time. Nico, you mentioned at the top that obviously ESPN is owned by Disney, and we've been kind of wondering for some time, haven't we, whether ESPN would make a move into online sports betting, and now we've got our answer. So yeah, I guess first place to start is what do you make of this big deal?
So first of all, the overall news with the agreement, a $2 billion sports betting deal, and Dave Portnoy buys back Barstool. Just each of these headlines could be a breaking news and a top news for it itself. So getting back to Disney or ESPN getting into the iGaming online sports betting world. So we have anticipated this move for quite a long time, and there had been three possible options. First of all, it was like building their own sports book, and they had job offers already on the Disney page. So there was kind of proof that they might consider building their own sports book. Then, of course, it was like buying an established brand. I was always going for DraftKings, a well-established DFS company with a decent market share, one of the leading companies in every state in the US. And last but not least, and this was a move or a possible solution which Pierre Lind actually came up with. It was licensing out their brand and brand name. And it turns out that they actually specifically or license out their brand name to Penn Entertainment. And as you already mentioned, the deal itself is so huge with a timeline of 10 years, a volume of 1.2 billion US, and they can buy further shares for 500 million US as well. So the overall is roughly 2 billion. It will be paid by yearly dividends, worth 150 million. And of course, the overall industry was just speaking about makes it sense because Penn Entertainment, they just literally bought the score for 2 billion. There are rumors going around that was anything else except a good deal. So I'm pretty sure as soon as Disney puts their name on something, they will make sure that their name doesn't fall short. So for sure, we will see another player in the sports betting world, and they have deep pockets. And as you already mentioned, after 3 years of time, the deal can literally called off if they don't reach a significant market share. And the significant market share they might be aiming for is 20%. So first of all, cutting out 20% of the existing markets will be quite tough to actually make it happen. But as said, within a period of time, after 3 years, we will for sure know if it was worth the investment or if it wasn't worth the investment. So for my end, I'm pretty sure it was worth the investment, and I'm pretty sure we will discuss this later on as well. There are some numbers indicating that it actually makes sense. So what's your guess on the overall deal?
Yeah, well, I mean, like you say, that this is such big news that everybody's kind of had some comments to make on it, and it was timed at the same time as Penn's quarterly results, like you mentioned in 10 and 5. So basically, I think their chief executive Jay Snowden thought he was presenting the financial results and was just bombarded with questions on this ESPN deal, as you can imagine. He described the deal as not just a typical media agreement, but an exclusive and comprehensive alliance that will redefine the sports betting landscape. So he's obviously super bullish, having just pulled off this deal. And Nico, importantly, you mentioned market share. So he said that both Penn and ESPN would not settle for sports betting market share of around 5%. And that, like you say, it would instead be aiming for somewhere around 20% long term. Eilers and Krychek has done some maths on this, and they think that Penn realistically can hope to obtain a market share of between about 9 and 18% before 2027. But they think it's going to be at the lower end of those estimates. So, Nico, you touched on it a little bit there, but you think that this deal kind of will help Penn to close the gap on the current market leaders like FanDuel and DraftKings.
Yeah. So first of all, what are we speaking about? We are speaking about a media powerhouse, Disney, ESPN, ESPN Plus. ESPN Plus has around 26 million subscribers in the US only. So, assuming that they will be able to convert from these existing customers, and based on the numbers which DraftKings actually provided during their start in Ontario, when they have been able to convert, if I'm not mistaken, 65, 66, 67% of their existing user base to become actual bettors. So if we just, take into account, they might be able to convert 50% of this existing customers. We are speaking roughly about 12, 13 million customers, if these customers originate from the 16 states where they might start. But it gives you some kind of head start as you have an existing user base already using your product. This was one of the leading causes why DraftKings and FanDuel are doing so great, because they can convert an existing user bases. And this is pretty much what DAZN is aiming for as well. So as said, just taking a look at these numbers, from my perspective, it actually makes sense. And when talking to all the media powerhouses, also here in Germany, they all have the same thoughts of, okay, we see a decrease in the advertisements spendings. We're just speaking about TV. Maybe they can extend their value chain into online business as well, but they see a decrease in the advertisement spending. So they for sure need to explore different options to, first of all, make their brand still work and worth spending money with the brand. And that's why, as of now, they're going into the sports betting vertical as well. What are your thoughts on this one?
Yeah, I mean, well, as you point out, ESPN, a massive sports media brand. But I think, one thing we've learned so far is that you need more than just a big brand to be successful in the market, because we've obviously seen companies like Fox Bet, for example, with the Fox News network behind them, and Maxim Bet with the Maxim magazine publishing company behind them. Both of those have been shut down, and nobody so far in the US has really been able to kind of recreate this success that, say, Sky Bet has had in the UK, for example. You asked my thoughts, Nico. I just want to bring in somebody else's thoughts. I think we've got a Twitter screen grab here on this topic, and this was probably the best thread. There were hundreds of them out there that I saw on the Penn ESPN deal this week. So this is Kyle Scott Laskowski, who he's been involved in US sports betting for a long time as an affiliate writer and a content expert, among other things. I've just chosen these two tweets from a thread, but it's worth seeking out the whole thing if you can find it. He says, ESPN Bet's success will not be based on how much ESPN promotes the brand. It will be based on how well Penn performs hand-to-hand marketing combat against DraftKings and FanDuel. They won't get close to 20% market share without additional effective marketing. And then just to touch on his final point, he says, he calls out the CEO of Penn basically, I don't think that this will end well for Jay Snowden. He led a £550 million acquisition of Barstool at great risk and then returned it to its founder for essentially free. He paid $2 billion for the Score, which is a subpar brand with little affinity, but supposedly good technology. Thank you, Elizabeth, for putting that up on the screen. And that technology point at the end there, Nico, is I think the key one for me, because more than good marketing and a strong media brand, we've said time and time again that it's a quality product, obviously, that resonates the most with customers. And you need an app that's good enough that people will keep on returning to it, basically. And ESPN Bet will be built on technology from the Score acquisition. It's basically Penn's proprietary tech stack now. It was obviously on Kambi, and they've made that decision to transition over to the in-house platform, which is apparently pretty decent, but it's probably unlikely to be able to compete with the likes of FanDuel's product and DraftKings product in the early days, at least.
Yeah, 100% sure, 100% sure. But when William Hill was acquired, and then they literally sold the retail business of William Hill. We're speaking about, and correct me if I'm wrong, 1,500 betting shops just in the UK. So they have, just not a foot in the door. It was like one of the leading, retail operators in the UK, and then 888 bought it, which led to the assumption that the acquirer has just had an interest in the tech of William Hill. Now we're speaking about the Score running their own proprietary sportsbook, as you already mentioned. And never forget, the deal was in October 2021. It was worth roughly $2 billion US dollars. When we're speaking about October 2021, Prop 26, Prop 27, California was still on the line. So if, for whatever reason, online sports betting in California would have come reality, probably the acquisition of the Score would have turned out to be a great deal as well. Of course, Prop 26, Prop 27, neither of those came true. So that's why, the argument of overpaying might be on the line. But as you already pointed out, in the end, it always comes down to the product and what kind of exclusivity you can actually offer. And we're speaking about probably, ESPN Plus, MMA streams, which they will be able to monetize within their ESPN Bets app as well. I'm not sure where else they have exclusive rights to actually offer the stream. But in the end, it all comes down to monetize the existing stream and offer exclusive bets on what you already have. And if they, I'm pretty sure they have very smart people dealing with this one, especially if the times are getting tougher with interest rates are rising. So then it might work out pretty well for them.
Yeah, good point. And I just want to bring Bogdan's comment in here as well. He says there's no need for them to compete with DraftKings and FanDuel, even if they had a 15% market share. That would constitute a significant achievement for them. And obviously, I agree with that, Bogdan. I think ESPN will be pleased with 15%. The issue there is that you don't get to a 15% market share without taking customers from FanDuel and DraftKings. And if their product is superior, then it's going to be difficult to do that. The other question there is ESPN, huge sports betting brand. How many ESPN users have already signed up with sportsbooks and have already decided on who their favorite US sports betting operators are? Because this has come so late in the timeline, it might be difficult for Penn to sort of reactivate those into their own ecosystem. But I'm sure they've got a plan to do that.
Exactly.
Yeah. As we talk about product, it makes sense, I think, to move on to FanDuel, Nico, because as you alluded to earlier, Flutter reported its H1 financial results this week. And the main news was that the US division is now profitable. It delivered a profit of £49 million compared to a loss of £132 million last year. So some improvement. And FanDuel, which is, as we know, the US market leader and obviously the standout brand in that sort of Flutter US portfolio, FanDuel generated adjusted EBITDA of $100 million just by itself in H1 and acquired 2 million new players during that period. If we look at the earnings call, CEO Peter Jackson said FanDuel was able to retain players for longer by having the best sports product, which was improved again in H1 because I think they added some of these sort of micro bet NBA player prop style bets to the product. He was quoted as saying, "We think the quality of our product, the levels of retention, and the structural margin changes we're making through pricing accuracy have all contributed to high lifetime values." Now, Nico, obviously it's it's well documented that FanDuel are number one in the US. But here's a question for you, putting you on the spot now. What do you think their current market share percentage is for online sports betting?
Overall US or specific markets? Overall US.
Overall for sports betting, not iGaming.
Okay. So overall, sports betting US, if I'm not mistaken. So FanDuel, DraftKings, BetMGM, these three combined have a market share of 80-85% in US. FanDuel probably leading 32-35%.
Good guess, and I like the maths that brought you to that conclusion. But it's actually 47%, so pretty much half of the entire market, which is obviously mightily impressive. But what might surprise you even more, Nico, is that number's actually gone down from last year. So that was 51% last year, which I guess is testament to the progress that DraftKings has made, which is also a profitable US sports betting business now. Don't forget.
Yep.
What I found interesting this week was Peter Jackson was asked about this. He was asked about the intensity of the competition from DraftKings, which reported some amazing results itself last week. And he sort of brought out the fighting talk. He said, "We recognize that people are making improvements to their products, but we are a fast-moving target for people to try and catch up with. We make 50% more revenue off every dollar of handle from our customers than our competitors do. We're making that money and we're investing it in further product enhancements. We remain very paranoid to maintain our product leadership, but also very confident we can do it at the same time." So yeah, that's come down by about 4 percentage points on last year, which shows that DraftKings is heading in the right direction. And I guess Flutter, as the market leader, is under a bit of pressure now to keep that market share as high as it is, especially if we've got massive companies like ESPN, Fanatics, Bet365, bigging things up in the US. That share might slowly tick away over time, especially if they get complacent, which I'm sure you'll agree, Nico, they can't afford to do.
Exactly. But it would be also kind of interesting, especially if we take a look at the US and the US market. First of all, does Ontario belong to the overall equation of US market? We don't know yet, right? Because it's one of the Northern American markets as well. And just taking into account the overall market size in the US significantly increased over the time span of the last 12 months. So if 12 months ago, the overall market volume of the US might have been like 20, 21 states. And, if we would get Ryan Butler on the call, on the show as well, he would literally out of a sudden, he's like, okay, market volume in the US 12 months ago was like 75 million customers. Or 55 million customers. As of now, 12 months later, the overall market volume of US is 150 million, 15 million customers. As said, it's just a guess, right? So there you see if the overall market volume doubled the size and they still maintained a significant 47% market share. This is just crazy, especially as additional brands actually entered the market as well. So even with the 4% market share drop, their overall customer bases, I'm pretty sure, has significantly increased as well.
Yeah, that's a good point. And we'll have to keep an eye on any state regulation that might be forthcoming. I think a lot of those 2 million customers that were acquired by FanDuel in H1 were in new states like Ohio and Massachusetts. So they managed to do it then. But like you say, there might be some states where, I don't know, maybe it favors ESPN. We saw like Barstool, for example, was big in Michigan, I think it was, and it does depend on geography to a certain degree. But yeah, one to watch out for. Thanks for everybody for commenting on that as well in the chat. It's good to keep the discussion going. So that's the US covered, I think, for this week, Nico. I think we've got time for one more main topic, which you teased very nicely in 10 and 5, and that is Entain. This was another sort of story that came out alongside the financial results, where companies end up talking about something completely different because they've had to set aside a potential settlement pot of £585 million relating to this ongoing prosecution agreement that they're trying to settle with Her Majesty's Revenue and Customs, relating to the kind of historic behaviour of Entain's Turkey-facing business, or GVC as it was then, which has been rumbling on for some time now. I think a few weeks ago they said they were nearing a conclusion to this case, but I don't think we ever could have predicted that they would have had to have paid, nearly £500 million to settle this matter, Nico. That is that's not pocket change, is it, for anybody?
No, that's for sure not pocket change. Or it's 1/4. No, it's 1/3 of the ESPN and Penn deal. So just to put it a little bit into perspective, it's 1/3 of a 10-year deal, including the $500 million US probably buying of shares as well. So it is a massive payment. I've never seen anything close to being this one.
No, and I think the main reason for that is because this is not a regulatory issue in gambling. This is a criminal case from the Crown Prosecution Service, and what Entain are doing is settling via a deferred prosecution agreement, which means that it basically doesn't need to go to court. And this relates to, what they've been charged with is an alleged offence against Section 7 of the 2010 Bribery Act. So they're alleged to have broken the law, although we have no details over exactly what that involved. But it was thought to also involve GVC's management team at the time. And Entain chairman Barry Gibson today spent quite some time on the earnings call, kind of trying to distance Entain from GVC and distance the current management team from the previous regime. And he said something like, following a complete overhaul of our business strategy and culture in the last few years, the Entain of today bears no resemblance to the GVC of yesterday. And he even went as far as to say is that the previous management had lower standards, and I think he's talking about compliance there, obviously, than Jetta and the team that are in charge now. But yeah, I mean, what the biggest regulatory fine by the Gambling Commission is £19 million. So to put that into context, like we've said, obviously this isn't a regulatory fine, but potential criminal proceedings. So that's the difference between them. Pretty significant. Nico, do you have anything more to add on this topic?
No, I'm pretty sure we covered this one in full. But as said, the overall result of Entain is still great, with a year-on-year 14% increase. So already covering this roughly 600 million quid as well. So shout out to Jette Nygaard Andersen and Team Entain for coming up with these strong numbers.
Yeah, one thing to say as well is that 585 million settlement is payable over 4 years, so it's not likely to be sort of a lump sum that's going to impact the bottom line in one go or anything like that. You mentioned the Entain results; they came out today, and yeah, they were pretty solid. 11% rise in revenue to 2.4 billion, online revenue up 12%. EBITDA up 6%, I think, so fairly strong. But there are some markets there which will concern them, I think, because the UK, for example, is down 2% year on year. Australia is also down 2%. Brazil, which was a massive growth market for them, is down 14% because I think they're looking ahead to regulation now because they've got this pledge to be 100% regulated by the end of 2023, which means, Brazil, will it, won't it? It has regulated, but will it be there by then? We don't know. And then Germany, obviously, Nico, which you know only too well, was down 30% year on year. And Entain said that was due to obviously the new sort of sports betting and gaming limits that have come in on deposits, but also due to a lack of regulatory enforcement, because they're saying that basically the players can just quite easily go to offshore operators to get those deposits that they want, which means that regulated companies like Entain are obviously losing share.
Exactly. And the offerings in the non-regulated market is way more attractive. Just to give you an example, on a regular Bundesliga match with no regulatory boundaries, you can offer at least 250, 300 different betting markets. Right? So 250, 300 betting markets. If you're fully compliant with the regulatory framework, you end up with 50 or 60 markets. So first of all, as long as the player can access these unregulated markets, he can just compare regulated offerings, 60, 60 markets, non-regulated 250 markets. So take a guess where the players actually would sign up for. And this is actually the case in Germany as well. As of now, we see a overall decrease of roughly 13% in the overall handle. So it's 1-3%, and this is just crazy. And fingers crossed that at one point they will come up with either securing the overall landscape for licensed entities, and if they don't come up with this one, we will just see even the bigger dogs leaving the market as well.
Mm-hmm. Yeah, exactly. And obviously, for the most of this stream, we've talked about the US market, and with Entain, a lot of the questions today on their earnings call was focused on BetMGM and Angstrom, which is the sports betting technology company they've bought, and it was very, very detailed and very in depth. I think it was a 55-minute presentation from the CEO and then a 45-minute Q&A. So if that is your area of interest, I urge you to tune into that, as it will be available in demand on their website. But sadly, we don't have enough time to go into all of that today between us, Nico. I think, we've done about 45 minutes now, so I'm quite happy to call time on the stream there. I think we've got through some good topics. And like you say, Connor better come back with some big news next week to keep this run going.
Yeah, and just to summarize, besides the Penn and ESPN deal, which was the lightning news, enlighten each and everybody of us, but on a separated and different note, DraftKings turned positive EBITDA, FanDuel turned positive EBITDA, and BetMGM as well. So the three market leaders in the US all reported a positive EBITDA. And if I'm not mistaken, they wanted to turn positive in Q2 2024. So they already, speeded up the overall process, and it will be interesting to just see where this will drive the overall market of the US as well. We will see some crazy bonus offerings like we've seen in New York with a 3,000 US sign-up bonus, because whenever big companies actually enter a market with deep pockets, the overall winning team will be the customers.
Yeah, exactly. And you're right to mention that EBITDA profitability, because Penn, obviously, who we've been talking about today, they're targeting adjusted EBITDA of between 500 million and 1 billion by 2027. But they, unfortunately, are one of those companies that is not profitable yet. So in Q2 2023, they made an adjusted EBITDA loss of 12.8 million. So yeah, they're a little bit behind those big guys, which is why they've done this deal with ESPN. They'll be hoping that can make all the difference. Great, we've gone full circle there. Thank you to Bogdan and Pavlo and everybody basically that commented today. It's an absolute pleasure to have you join us each week. A big thank you to our sponsors, Playson and YOLO Group, and a massive thank you to Nico, who provided an amazing 10 on 5 and always does a brilliant job.
Thank you for having me.
See you again next week.
Okay, see you.
Thanks, bye-bye.
Bye.